welcome to the Snowbirds Expat Radio Podcast. I'm your host, Gerry Scott. Today's episode, we're going to be focusing on U.S. people, U.S. persons living in Canada. And we have a returning guest, Robert Clegg from beautiful Victoria. And as we're talking about beautiful cities, we have to mention Vancouver. And in about 4 or 5 slots down, we'll mention Toronto as well, Robert, because that's where our wonderful host is from Toronto. And
absolutely.
I was fortunate enough. I flew out to Toronto last week, and I got to celebrate Mike's 50th birthday, and I got to meet all his friends at the brewery where he holds his Friends of Toronto Mike get-together. So that was a great experience. So before we jump into these questions for these Americans living in Canada, once again, tell us more about your firm and what you can do for all these snowbirds that are out there and all these expats that move up to Canada here.
Oh, for sure. Well, our firm is called CanadAmerican Tax Services. It's a small firm. There's 4 of us, all U.S. Accountants, CPAs, attorneys, such as myself. And we provide services for American citizens that live in Canada, live in the United States. We have clients in Europe. We have clients in Asia. So really anywhere you live, we can certainly help you out. And we provide corporate partnerships, entities, individuals, right? To a lesser extent, we assist Canadians, with the sale of U.S. properties mostly, right? Probably going to get a lot of that from Hawaii. We're seeing an uptick with sales, Canadians who own property in the U.S., Arizona, California, Florida, Hawaii. So that seems to be upticking, but that in a broad sense, that's what services we provide. And we provide it from Canada. I'm located in Victoria. My managing partner, Alex, is located in Vancouver. And my colleague, Gary, is located in Calgary. So, like a modern office, we're all in separate locations, right? All linked by technology.
Oh, that's pretty good.
It's a wonderful thing. So.
Oh, I'll tell you. And you do live in, I was born and raised on Vancouver Island. So you do live in a beautiful part of the world. Okay. Are you ready for these questions?
Absolutely. Fire away.
Okay. So the first question is, I just found out that I'm supposed to be filing U.S. taxes. How do I get caught up? And what do? Do I run and hide? Or how can you help me?
Well, the best approach is do not run and hide, right? The IRS has programs available. To name 2, one is called the Streamlined filing procedures, kind of a quasi amnesty program. They don't really call it an amnesty, but it's a set of procedures that American citizens resident abroad can use to get caught up on their filings, right? Another one is special relief procedures for certain U.S. citizens. And this one involves U.S. citizens that, one, never lived in the United States, never worked in the United States, accidental Americans, right? They were born in Canada. Their births were registered abroad at the consulate. They don't have social security numbers, and they're looking at renouncing their citizenship, right? And we can go into detail on that a little bit later. But our firm has helped many U.S. citizens abroad become compliant through the filing of the Streamlined filing compliance procedures.
I really do come across a lot of folks that are these accidental Americans, and we call them accidental Americans, or they find out that there's filing requirements. But I'll tell you, these people are really, really freaked out. And, I have this one client that, they do have a large net worth. They sold their businesses, and they're just afraid of that entire process. So how far would they go back? And if you had to streamline?
They go back 5 years. So for example, if you renounced in 2024, you would have to file from 2019 through 2023. That's the 5 years. And then your 2024 would be what's called a dual status Form 1040 NR. So, and that would be filed under the special relief provisions. So to name a couple of requirements to qualify, you have to have no social security number. You either have renounced or you're looking at renouncing. Your total tax liability is going to be less than $25,000, and you complete a Form 8854. One of the benefits of this program is you will not be considered a covered expat. In other words, even if your net worth is more than 2 million US, you will not be subject to the covered expat provisions under the Internal Revenue Code. And that's huge, right? Typically what I see, because the tax rates here in Canada are much greater than the federal rate. You know, we've got a federal and we also have a provincial rates that we have to calculate and pay. There's typically sufficient foreign tax credits to eliminate or greatly offset any US tax liability. And so at the end of the day, they complete those 5 returns. They get the 6th one, which is a dual status 1040 NR, and then 6 years of delinquent FBARs. File that, we compile it, we send it in, done.
So you're saying that these people should not be fearful. If they don't have SIN numbers, social security numbers, they should not, it's not as big or it's not as scary as one would think for them to come.
Absolutely. Absolutely. Yeah. For folks that, maybe they moved to Canada 20 years ago, a friend during, a hockey game or whatever said, hey, you're living in Canada. You don't have to file US returns, because you're not a resident of the United States anymore. That's bad advice, right? So maybe a 20-year gap has transpired. They want to get caught up. They've got a social security number. And they come to me and they say, hey, what can we do? My first question is, what's your intention, right? Do you want to remain a U.S. person? Is your intention to renounce, right? If they want to remain or they want to renounce, they need to get caught up in either case. So for those folks, we would recommend what's called the Streamlined filing procedures, right? And that is just a good opportunity to get caught up. In that program, the IRS asks for the 3 most recent delinquent returns. So in this case, we'd be filing 21, 22, and 23 Form 1040s, along with 6 years of delinquent FBARs. We have to complete a declaration form that the client signs under penalty of perjury. And then the biggest benefit, penalty relief. They will only calculate and assess interest, no penalties on any delinquent amounts outstanding. And that's a huge thing, right? So in other words, if you've missed 20 years of FBARs, each of those FBARs has a potential penalty of $10,000. IRS says, hey, look, if you file under the Streamlined compliance program, we'll accept 6 of those. We'll accept 3 years of tax returns, and we will waive any and all penalties going back to the original year of your delinquency, right? So that's huge. Penalty relief. Then they do say you have to continue filing going forward, right? So penalty relief is really what it's all about. I don't know about you, but if I had 20 years of delinquent taxes, I don't think I'd be able to sleep very well at night, thinking, next time I cross the border, are they going to ask, right? Am I going to get a letter, right, from the IRS saying, hey, where's your stuff? Is my bank here in Canada sharing my banking information with the Department of Treasury and the IRS? Those certainly could come true, right? So in my opinion, if you can get caught up, then if you really don't like continuing to be a U.S. citizen, at least you'll have your compliance part of the whole renunciation process completed and done, and then you can follow through with the, the consular renunciation.
So this person, yeah, so Robert, this person who doesn't have a SIN number, has never lived in the States, but is that accidental American. So they still, I guess, explain that situation. What would that person need to do?
That person, well, first we'd have to assess, is that person going to owe $25,000 or more U.S. tax? If they do, then the program, that special relief for former citizens, is out, right? We would have to probably file them under what's called the Streamlined procedures and have them pay the tax. They would get to that 5-year mark, and then they would have to renounce. But if you're going to do that, you have to also apply for a U.S. Social Security number. If they're in Belling or if they're in Vancouver, the office that serves Yukon and British Columbia is the office in Bellingham, and that's where they would have to present in person supporting documentations and make an application for the Social Security number. And then once we have that, then we can get them caught up, and then we can prepare everything and give them the final tally as far as what's due. But if they're under that $25,000 threshold, then they can go ahead and renounce. We get 5 years of tax returns, right, preceding the year of renunciation. We do a 6th return, which is the year of renunciation, and say they renounce in 2024, right? So we do a final in 2024, 5 years before that, and then 6 years of FBARs. We would complete a Form 8854, which is that expatriation form that, ironically, the State Department during the consular renunciation process will give you. They make no uncertain terms. You got to complete this. You got to get your tax returns compliant, all of that. But under the special relief for folks with no Social Security numbers, as long as they don't owe $25,000 of IRS tax, they will not be considered a covered expat. And what I mean by covered expat is they owe over a certain dollar amount in taxes each year. They are not compliant with their tax returns, which they would be because we'd be getting them caught up. And their assets are valued at more than $2 million. So in in this person's case, even if they're over the $2 million threshold, under the special relief procedures, they will not be considered a covered expat, and they will not be subject to that U.S. exit tax that normally would apply. So it's a good program, right?
Now, when you use the term $25,000, so let's say, for example, this was a very, very high net worth person, could they be subject to a lot of tax?
It depends on what they've got, right? If they have interests or they control foreign corporations, I see a lot of times, doctors, lawyers, I don't blame them. They operate through a corporate structure. Makes sense, right? They're professional. They operate through a professional liability corp. If it's not done correctly, that can result in rather sizable IRS liabilities, right? But if they don't have that and they are paying regular taxes to both the federal and the provincial governments, then highly likely, they're going to have sufficient foreign tax credits to eliminate the U.S. liability. Because under U.S. rules, if you're living abroad and you're paying taxes to a foreign government, which we all do, at least from a U.S. perspective, right? We can apply for a foreign tax credit to offset the IRS liability. So, and that's oftentimes what I see. There's sufficient foreign tax credits to greatly eliminate, either substantially reduce or outright eliminate IRS liabilities.
Now, you did mention that you would do an estimate on any taxes being owed. So does a person go down this road and then all of a sudden say, whoa, wait a second, I can't go through this procedure? Is that
Well,
common?
sometimes it depends. We'd have to have a look. What we always do, we ask for those 5 years of Canadian tax returns, and then we review them, and we determine what type of, or the size, if any, of IRS liability there would be the outcome, right? And so we just start from year one, 2018, 19, 21, and 2. Actually, it'd be 19 through 23. Tally it up. If it's under 25, then we know we're good to proceed. And typically, I mean, I've been doing this for years, right? I can tell when I look at that Canadian tax return, barring they don't hold interest in, privately held Canadian companies, right? Like I alluded to earlier. And then we can assess it rather quickly and say, look, your liability is going to be either zero or it's going to be minimal, right?
But at the end of the day, you always recommend that these people do have to, under this relief program,
Yeah.
if you're volunteering, the penalties could be a lot more favorable.
Absolutely. Well, the penalties are relieved. The only thing the IRS will charge in the case of a streamlined filing, those are citizens with social security numbers, quite possibly compliance history, right? Maybe they lived in the US, they filed, and then they moved here and just never filed. They'll relieve you of any penalties. They will charge interest on any amounts due, which in my view is it's a really good opportunity to get caught up. And those typically are folks that want to remain US citizens. We have a lot of folks that, they lived in the US, they moved here in their 20s, now they're in their 60s, for example, and they want to renounce. They have a social security number, past compliance. We put them through the streamlined filing, and year 5, they're free to renounce, right? The timing is really good because most of these folks want to renounce here in Canada. And to schedule an appointment at a consulate in Canada, it's taking maybe a year and a half. So, by the time they have their hearing or their renunciation appointment, we've completed those 5 years. And then that's year 6. And then we'll get that completed the fall, say they renounce in 2024, we'll do the 2024 during the tax season, which begins in calendar year 2025, right? Get it all done, we get it mailed out, and then they're finished. Does that make sense?
Yeah.
And that's a rather complex area, but
yeah. And I guess the whole idea of this podcast, I've always said the idea is education and connections and making sure that who's listening to this podcast, next Pat, would come across and say, oh, I got to give Robert a call. So that's really what we're intending to do. I just find in my profession, I find so many of these Canadians that had American parents, they've done extremely well for themselves up here in Canada, and they really are fearful of that. What do I do? What do I do? And we're talking that they've had entities, they've had corporations, they've had businesses that they've sold, and they're fearful. And you're saying that maybe they shouldn't be, but at least you can go through the process.
Oh, absolutely. Yeah, it's always good to seek the advice of a professional, right? Yes, you prospered, no social, you're a US person. Doesn't mean you can't become compliant and eventually renounce if that's truly your intention. I also have folks that they discover they're American citizens and they're gleeful. It's like, oh my gosh, okay, let's get caught up. I'm moving to Palm Springs, right? Mm-hmm. So it kind of goes both ways.
Yeah.
So, yeah.
Well, that's what we have to make sure that we're able to take the fear out of this and just get people to take their head out of the sands and kind of move forward from there.
Well, really, in all actuality, the IRS has really, in my view, gone out of its way to put together the processes, whatever you call it, for these non-compliant citizens to become compliant without excessive penalties. Again, they will charge interest on any amounts due, but not the penalty. And the penalties, keep in mind, they can amount to 50% of the amount due, right? Huge.
So you're saying the difference between the SL and the relief program is one person having a social security number and one person not having it?
Well, it goes a little bit beyond that. The special relief, no compliance history. They've never lived in the United States. Never. I mean, when they say lived, oftentimes there are some accidental Americans that were born, say, in California, but they have no substantial presence in the United States, right? They don't have a social security number. That's the big one right there. And they owe less than $25,000, right? IRS liabilities. So as long as you comply with that, it doesn't matter if your net worth is $10 million. You're not going to be considered a covered expat, subject to the exit tax.
Okay, interesting. So a little bit more about the Form 8854. That's the big thing that has to be filed in both cases?
In both cases, you bet. Yep.
Okay.
Yeah, and so basically what that is, it's a form signed under penalty of perjury, and it basically details the loss of U.S. citizenship, right? And how you obtain citizenship, right? And there's a few ways: naturalization, birth abroad. You had your birth registered at the consulate, or you're born in the United States or one of its territories, Puerto Rico, Guam, that sort of thing. And then it also details your IRS liabilities, right? Any tax that was due, 5 years immediately preceding all the way up to the current. And then your balance sheet. You have to disclose your worldwide assets converted into US dollars on the date you expatriate, right? So we find what the US versus the Canadian dollar was worth on that day. We convert everything into US, tally it up, and if it's under $2 million, then there's no issue with being a covered expat. But if you're over, then, in advance, we'll know in advance because we're going to be analyzing this. There are opportunities to plan, gifting to a spouse, right? To bring you back under. For example, under that $2 million threshold. And there's nothing sinister or illegal about it. It's tax planning is basically what it is. If your assets are reduced by a significant amount, then a disclosure has to be made in the filing as to exactly what was done and the purpose behind it.
So you have to believe that this accidental American, and this accidental American then all of a sudden has his own sibling, has his own children, and that problem just continues to kind of move along?
Well, it's my understanding under current immigration rules, if the accidental American did not live in the United States up to the age, I believe it's 50, like 12, or there's a number of years that they were required to live in the United States to pass citizenship on to their children. You're not going to be able to pass. I think it's 8 in the last 15 years. It was 8 years up to the age of 15 spent in the United States. So if they spent no time in the United States, they can't pass that citizenship on to their children.
Okay, so maybe this is one of those things where, okay, my father was an American. I was born in Canada, but I've never lived in the United States whatsoever. Am I still considered a accident?
Absolutely. Yeah. Yep.
But
children likely not. Right?
Sorry?
The children likely not.
My children would not be accidental Americans.
No, I don't believe so. Yep.
Okay, that's interesting.
Yeah.
But they have the opportunity to file for citizenship.
They can, because you can also use time spent with a grandparent, right? It is, this whole field of immigration laws complex, but there is a way if your own parent didn't spend enough time, you can use the time spent by the grandparent so that you qualify for citizenship, right? Derivative citizenship through a parent-grandparent.
We had a guest on our podcast, really interesting guy. I remember reading this book in the mid-90s, and it was called Take Your Money and Run. And the book was written by Alex Doylis. And I've told this story a few times, but I actually went online, and I had just met with a surgeon in Vancouver here, and the first thing he told me was, get me out of here. This system is broken. Canada's broken. Get me out of here. And I recalled how I read this book in 1996 called Take Your Money and Run. I said, I'll get you a copy of the book. You'll enjoy it. And I went online I don't know what I was thinking, but I just went online. I went into this Alex Doylis' website, and there's his phone number. And I called him. And something about being an 84-year-old man, he probably doesn't get a lot of calls. He gave me 30 minutes of his time. We had a great conversation. We had him on the podcast. But it started to spark a lot more interest with other folks that I talked to. They started finding out where their grandparents were citizens.
Mm-hmm. Absolutely. Yep.
And then allowed them to get a citizenship, which allowed them to become a citizen of a country and then exit Canada.
Absolutely. Yeah, these are, we have citizenship renunciations. Well, there are also citizenship claims, right? Based on where you were born, based on who your descendants are. The United States isn't the only country that does that. You have Ireland, Germany, numerous countries do allow citizenship derivatively through former or current relatives who might still remain citizens of these countries. So, if they have citizenship claims, say, for example, they want out of Canada, they might have a claim for U.S. citizenship. There is it's exactly the opposite of renouncing your U.S. citizenship. You get your U.S. passport, and then you can renounce your Canadian citizenship if you're so inclined. But really, my view, there's no need to renounce Canadian citizenship because you can simply exit Canada and cease being a Canadian tax resident going forward and never have to be subjected to Canadian taxation again by virtue of moving to the United States once you obtain U.S. citizenship, right?
So let me ask you this. Why is it that United States is one of two countries in the world, and why do they really enforce this, that you're going to be a taxpayer? As long as you're a citizen, you're obligated to pay for tax. Why is America big on this?
You have to go back to the Civil War when the North fought the South and the country split. I think it was in 1861, 1862, the common consensus was the Union, the North, was going to lose. And so a lot of Americans decided to get out of Dodge. They moved to Canada, they moved to Mexico, they moved to Europe. They were like, this place is done. I'm not gonna be living here, and I'm sure not gonna be paying taxes, right? And then secondly, the South seceded, right? And so they said, hey, forget it. We're no longer Americans. We're definitely not going to be paying taxes, right? So Congress said, hey, let's draft a set of, first of all, we need income tax, right, to help fund this war. And so they came up with the first version of the Internal Revenue Code, and they based taxation on the whole notion of U.S. personhood. And they said, doesn't matter where you run. If you're born in the United States, and yes, Mississippi, Texas, Alabama, Georgia, the Confederate States, you're all part of the United States, you're still subject to U.S. taxation. End of the day, the North won. They got rid of the income tax until World War I occurred. They needed money. They dusted off the old act, brought it back in, but they kept those provisions, right, in the code.
But if you have a treaty with the United States and Canada, the treaty is there to eliminate double taxation. So you pay the tax in Canada, and if you're paying more tax than you would be if you live in the United States, foreign tax credits would would offset any kind of tax being owed. So what's the point?
Well, not all. The U.S. has certain unique tax regimes. One, which I believe we're going to do a podcast on, it's called the net investment income tax. And that's unique to the United States, right? And it can't, it's all based on the amount of passive income, interest, dividends, capital gains that you have, and your, lack of a better term, your taxable income, right? If it's above a certain threshold, you're going to be subject to that, and it's a 3.8% additional tax. So you may owe no income tax, but you might owe a net investment income tax, right? I mentioned earlier, these privately held corporations, Canadian, corporation that wholly owned by a U.S. person. In 2017, they brought forth a new tax called the Global Intangible Lower Taxed Income. And that is basically a clawback, right? So, for example, if you wholly own a Canadian company, and at the end of the year, you have net income in that corporation, you're no longer allowed to just defer paying income tax on that by keeping it in this, Canadian or foreign corporation. The IRS now requires you to claw that back and report it on your 1040, subjected to income tax. But the real kicker is there may be no foreign tax credit to be had, right? So there would be a liability, right? So if you're structuring, if you're planning, if your investments aren't aligned with U.S. legislations, right, U.S. rules, you might end up owing, right? So that's the big problem, and these are not addressed in the treaty yet. We're hoping that they at some point will be, but they're not addressed in the treaty.
Well, I think the best way to really go into great detail on what we've discussed today is we'll come up with some case studies, you and I, and we'll do this on a webinar. And through our Snowbird USA tracker and Canada Physical Presence tracker, everybody will get a notification that they can sign up for the webinar. And we'll do that over the, we'll make a commitment to try and do it once we get through this beautiful weather and we start getting into the fall. But
we'll have to schedule that for Maui.
Yeah, that's true. I know you're going to be there, and I'm committed to buying the beer and paying for the golf. So I look forward to in Maui. But I think it would be great to go through these case studies of the two examples you used today, the SL and the relief program. And we'll paint out some scenarios, and then I'm sure that we will be able to get that message out there for the audience. The Snowbirds, more so, like I say, today is about that expat that moves up to Canada here. So, Robert, on that note, I always enjoy our conversation. I did mention I'm going to be trying to make it over to Victoria for the day and on this in the month of August. So I appreciate what you do for the joint clients that we work on together, and thank you very much.
No, it's always a privilege and pleasure. Absolutely.
And like I say, the world is small, so be kind to all. So thank you very much. And we will get the details of the webinar out to people. And we look forward to going through the case studies.
Yeah, absolutely. Thanks very much. Appreciate it.
Okay, take care.